Are we entering another recession? As I'm making this video, the S&P 500 is on a pretty large downturn, and people are getting scared. Of the three modern recessions, in 2000 with the internet bubble, 2008 with the housing crisis, and then 2020 with COVID, looking at the unemployment rate, we did get curl ups into 2001, into 2008, and then 2020, a little bit of a unique scenario with lockdown just being a huge spike, but we are getting a little bit of a turn up in unemployment rate right now at 4.3%, which is exactly what it was entering into 2001, and into 2008, it was slightly higher at 5%. The country's real GDP numbers have continued growing, but I want you to take note of the sort of flat line that happened during the 2001 recession, the pretty harsh drop, at least in the latter half into the quarter half of 2008, and into 2009. And then obviously, once again, COVID being a little bit of a extreme scenario with the drop. Right now, our GDP is still growing. We're not seeing any stagnation of the GDP in Q1 2024 to Q2 2024, which is what we're currently in, or at least awaiting Q3 numbers. We are still growing. But take note that into 2000 and into 2008, the GDP didn't really stop going up until the recessions started, which is, of course, highlighted by these darker gray areas. So maybe not necessarily meaning too much, but obviously recessions are often defined, not precisely defined, because it did happen here in 2022 and we didn't get a recession, but often defined by two back-to-back declining GDP periods, right? So you definitely want to keep an eye on this chart. Let's hop into the charts and talk a little bit of technicals just for a little change of pace. And then I do have a couple more macro charts to show you after. I just want to talk about one thing here, and that is this volume subgraph. I want you to take note of the ramp in volume on the S&P 500 ETF during these recessions, during the 2001, 2008, 2020 recessions. Look at the ramp in volume. And not even just the recessions, other kind of large pull downs in SPY get massive volume reactions, even this kind of multi-month pullback here in 2020. If I hop down to the daily chart so we can see a little bit more granularly, you can see when you get large pull downs, you get heavy volume. That is seems to be decent leading indicator into when we could get lengthy S&P 500 drawdowns. And I want to make note of one more quick thing. Look at when we got the heaviest amount of volume on our current pull down. So far, and this could change obviously, but so far it's been the bottom. If we take a look back at maybe another pull down like this, when did you get the heaviest volume on this pull down in 2020? The bottom of this bounce, the bottom-ish of this bounce here. So just another kind of volume tip to look at here. In 2020, you got the heaviest volume here, which wasn't quite the bottom, but if you were buying here, you still did pretty well, right? Also, as it pertains to chart and price action, I just want to touch on this chart here, the largest percent changes, and I want to focus on the gains side. Take a look at the years where the S&P 500 got its largest daily percent gains. 1929, 1930s, this is all the Great Depression, right? The largest days in the S&P 500 during the Great Depression. Then you get some 2008, more Great Depression. Then 2020. Then you get down and look at some more Great Depression dates, but still, I just want to note that during recessions, you tend to get huge Green Day bounces. And just confirming that on the chart, one of those days in 2020, one of the largest S&P 500 days was this day here, March 13th, 2020. S&P 500 went from this price to this price, being an intraday change of 9%, which is insane. But you can see the S&P still went down another about 19% from there. Bear market rallies are very real and something to keep an eye on. If you're enjoying this objective statistical breakdown of recessions, then you'll enjoy the statistically proven strategies over on my website, daytradingstrategies.net. There's a link in the description down below. Go check it out now. Next, let's talk home prices. Home prices in America, for the most part, have always gone up. But if we dive down into a more granular chart looking at the last 3 recessions, as we have been doing during this video, we can see during the 2001 recession, home prices were flat to a little down. During the 2008-2009 recession, maybe obviously, thus being the leading cause to this recession, home prices got crushed, right? And then in 2020, home prices did go down, albeit this was a very short recession. Can't pull a lot of info from that. Right now, we do have flat to down home prices. Over the last year, actually, even longer than a year and a half, home prices have been stagnant to down. Now, albeit we went on a massive run coming out of COVID into like the middle to late end of 2022. So we did just go on a huge run, but it's worth noting, especially looking at how home prices react going into previous modern recessions, that we are currently flat to down on home prices. Now, let's talk about the federal interest rate fund. And this might be the most damning chart for the yes case of are we about to enter a new recession. Let's take a look at the past 3 modern recessions. Into the year 2000, we got a pump up to 6.5 or 6.5, should I say, on the federal funds effective rate. And look at this. When they began dumping, then we went into a recession, right? Into 2006, 2007, we got a pump from 1 on the federal funds effective rate up to 5.25. And then they began bringing down the interest rate. Then we entered a recession. Going into COVID from 2015 to 2016, we were in a no interest rate environment for a long time, actually. Coming out of the housing crisis, we were in a 0 interest rate environment. They began raising the interest rates in 2016, all the way through 2018, all the way in 2019. And then they began cutting in 2019. Then obviously, listen here, this is a little different. This was a black swan event. COVID happened. I don't think the federal fund interest rate going down created COVID or anything like that. But it's still, listen, the chart to the charts, the numbers are the numbers. It's all we're looking at here, right? When they began lowering the interest rates, recession happened. And then obviously during COVID, we dropped immediately, we dropped all the federal funds effective rate off. When we began printing all the money, of course, we had to then once again, and right now we've gone through the largest pump, at least looking at these last 3 modern recessions that we have. We went from once again a 0 rate environment late 2021 to now we are up to 5.25, slightly over on the federal funds effective rate. Now, if they begin lowering the funds, are we going to enter another recession? The current federal fund futures are predicting a cut at the next Fed meeting in just a little over a month on September 18th. And then from there, they are predicting cut. Now, this is obviously very subject to change. This is all very long dated futures, so this isn't definitely guaranteed to happen. But what the current projections are, definitely worth keeping an eye on. So, is another recession coming? Well, if you find a way to consistently answer that question, there's a Nobel Prize waiting for you. But now, after watching this video, you at least know what to keep an eye on over the next 6 to 12 months so that you can remain prepared. Please hit like, please subscribe. It really means the world to me. And I'll catch you all in the next one.